Coming up on Business Incorporated. South Africa's Minister of Finance presents much anticipated national budget policy for 2022. And IMF completes first review of extended fund facility arrangements for Cameroon. Plus, Egypt names 6 international lenders as it sets out to sell first Islamic bonds. Great to have you join us on Business Incorporated. I'm Ladi Williams. Kick off with trading activities in major equities on the African continent. Nigeria's NGX was a lone gainer at intraday, although marginally up by 0.03%, while South Africa's GSE index stumbled more than 1.7%. Similarly, Egypt's EGX 30 took a massive swipe at intraday. Its index was down 3.34%. Meanwhile, the Nairobi Exchange closed Wednesday's session also in negative territory, down 1.90%. And in the Middle East, trading activities were negative as the Abu Dhabi and Dubai indexes fell 1.05 and 2.08% each. Elsewhere in the region, Saudi Arabia's index also dropped 1.34%, while the Qatari index declined 0.87% at intraday. It's all red in major markets. Now heading to Europe, the situation in Ukraine is still dominant. I see Europe is urging its airlines to stay away from Ukraine's airspace. Let's hear more now from Rob Watts right there in Berlin. Great to have you, Rob. Well, European airlines are being told to stay away from Ukraine. What sort of impact is this having?
Well, if you look at a map of planes in the air over Europe right now, you'll see a black hole in Ukraine and the surrounding area. That's because Ukraine has closed its airspace to civilian flights, saying there is a high risk to their safety. The reasons for that are pretty obvious. We know of shelling by Russian missiles in cities across Ukraine, and in the Ukrainian capital Kyiv, people are hiding out in bomb shelters. The European Union's Aviation Safety Agency has taken the additional step of not only telling planes to stay away from Ukraine itself, but also urging commercial airlines not to fly within 100 nautical miles of Ukraine's borders with Russia and Belarus. It says there's a risk of both intentional targeting and misidentification of civil aircraft. The agency will no doubt have in mind the shooting down of Malaysia Airlines flight MH17 over Ukraine back in 2014. Almost 300 passengers heading from Kuala Lumpur to Amsterdam died in that incident. So the EU's Aviation Safety Agency wants European planes to stay well away from Ukraine.
Yeah, quite sad. But the EU and US are trying to squeeze Russia economically. How are they going about this?
Well, we've already had the sanctioning of Russian banks, individuals and other institutions. But given the severe turn the situation has taken on Thursday, more severe sanctions will certainly be coming. From Germany's perspective, a major card was already played earlier this week when it announced the halting of the Nord Stream 2 gas pipeline approval process. This is a multi-billion-dollar project that was supposed to double German imports of Russian gas via the Baltic Sea. But another nail has also been hammered into the coffin of Nord Stream 2 now by the Americans. They've officially sanctioned the company that operates the pipeline. So it's now very hard to imagine gas surging through Nord Stream 2 in the near future, if ever, because Russia's military assault on Ukraine is not going to be forgotten quickly.
Obviously, trading on Moscow Stock Exchange has been suspended. What more can you tell us about this?
Well, in recent days, we've seen Russian stocks plummet as a result of the tensions between Russia and Ukraine. And today, the Moscow Stock Exchange took the dramatic decision to suspend trading on all markets, saying only that it would announce the resumption of trading at a later date. It was no more specific than that because we have no idea how protracted the situation in Ukraine is going to be. Also dramatic is the plummeting value of the Russian ruble, which has fallen to its lowest ever value against the US dollar. The impact of those Western sanctions, both threatened and also already imposed on Russia, have taken a heavy toll on the country's currency. We've also seen the price of oil surging over recent days, and that's continued apace as Russian troops have entered into Ukraine. Brent crude has actually just crossed the $100 a barrel mark for the first time since way back in 2014, which is when Ukraine annexed Crimea, when Russia annexed Crimea. We've also seen major losses on equity markets around the world. So the extraordinary developments in Ukraine are echoing across the globe.
Truly extraordinary developments there. Thank you so much, Rob Watts, for the update. It's good to talk to you. Now, moving on to the UK, we see Brent crude oil hit $105 a barrel, up more than 8.5% today as markets fret over a potential for disruption to supplies. Let's talk to Juliana, see how it's going on there in the UK. Great to have you, Juliana. So I'm guessing oil bulls will be excited right now, but the risk of rising energy prices still weighs heavy, yeah?
Well, yeah, absolutely. It's hard to find any excitement at the moment, even though we have seen a barrel of Brent crude trading well above $100. This is the first time it's been that high since the last invasion by Russia, which was on Crimea in 2014. But even despite the high surge in crude oil, we're not seeing that reflected by the oil giants. Royal Dutch Shell, their shares are down. Brent, BP too, their shares are also down. That's probably because of their close ties with Rosneft, which is the Russian gas and energy provider. It's not been great. We just heard from Prime Minister Boris Johnson, who delivered a televised address clearly rebuking the actions by Russian President Vladimir Putin. Britain are under a lot of pressure at the moment. Earlier this week, yes, they did sanction those 3 Russian individuals who are all believed to have close ties with President Putin. But there is so much more that can be done. We know that there is more than £500 billion worth of Russian finances within the FTSE 100, about 33 firms currently trading in London. Will there be sanctions there? We are waiting for further updates. I believe the Prime Minister will be addressing MPs in the Palace of Westminster sometime soon. But we're also seeing a spike in the safe haven, not cryptocurrency, but in oil. Oil is now trading above $1,940 an ounce. That price has gone up by 2%. I just heard you discussing about the Ukrainian airspace. We know that that's closed. Grant Shapps, the International Transport Secretary here in Britain, has announced that there are no civilian flights coming out or going into Ukraine. But it's a developing story. We did hear from analysts at Bloomberg who have been able to look at the forensic examination they've taken on commodities prices. And there are now concerns that this potential war, we don't want to call it a war, but that's how it appears to be, could lead to further inflation in the markets. We know that Europe is just slowly recovering from this COVID-induced pandemic. Inflation is still a key term, but now because of wheat, which we know comes from Russia and Ukraine, gas, Brent crude, now that these potentially could be halted, we could see further surges in weeks to come.
Quite incredible times, I must say. But I saw earlier the UK FTSE 100 was down about 189 points. What sound bites are you getting in the markets today?
Well, yes, it is a seismic reaction on the markets. Markets are down everywhere. The markets in Europe, the German DAX, the CAC in Paris, it's not as bad here in London as it is there. The FTSE All Share is down by 2.85%. The FTSE 100 is down by 2.99%, and the FTSE 250 is down by 2.89%. In the currencies market, the British pound is down on the US dollar by 1.03%, though the British pound is currently up up on the euro by 0.13%, but down against the Japanese yen by 1.38%. Worth mentioning about UK petrol prices, we have been hearing from motoring groups, the AA and the RAC. They are suggesting that petrol could reach above $1.70 per litre. And this is again because we know that Brent crude is such an important asset that Russia does control. We're not yet certain whether they are going to close that pipeline, but there are fears across the market, Laddie.
Yeah, the ripple effect of all of this is felt all over. All right, Juliana, thank you so much. We'll keep tracking, see what the Prime Minister says later on. Thank you so much.
Thank you.
All right, so moving on now, we see markets across Asia. Negative territory in Japan. The Nikkei 225 declined 1.81% to close at 25,970 points, while the Topix slid by 1.25% to 1,857. South Korea's Kospi was down 2.6% at 2,648, and the Kosdaq dropped 3.32% to 848 points. Bank of Korea kept interest rates unchanged at 1.25% at its meeting today. However, it is predicted that consumer price inflation will run substantially above 3% for a considerable time. Shanghai Composite in the mainland China fell 1.7% to close at 3,429 points. And the Shenzhen Component dropped 2.2% to 13,252 points. Hong Kong's Hang Seng Index was down 3.6% in late trade. Shares of Chinese artificial intelligence firm Time Group plunged around 11% after Hang Seng Index has announced its weighting in the Hang Seng Tech Index when it's included in March would be 0.24%, revised down from 3.94%. Australia's S&P ASX 200 fell 2.99% to 6,990 points, with banks, miners, and oil stocks largely down. MSCI brought its index of Asia-Pacific shares after Japan traded 3.45% lower. And U.S. stock futures fell sharply as Russia attacked Ukraine. Dow futures fell 727 points, while the futures tied to the S&P 500 were down 2%. Further into correction territory, NASDAQ 100 futures declined about 2.6%, hovering around bear market levels for the tech-focused index. Bank stocks were among the big early losers, with Bank of America down 4% and Bank of New York Mellon slumping 6.3% in pre-market trading. Economically sensitive companies also took a hit, with Dairy and Delta Air off 5% and cruise line operator Carnival sliding 6.2%. Energy companies were among the few winners amid the rising prices. Devon Energy was up 5% and Chevron rose 4.2%. And oil prices jumped following Russia's invasion of Ukraine, with international benchmark Brent crude and U.S. futures both surpassing $100 a barrel for the first time since 2014. Brent futures rose more than 8.9% to trade at $105.36 a barrel. U.S. West Texas Intermediate crude climbed over 8.7% to trade at $100. Natural gas prices popped 6.1%. Spot go, traditionally seen as a safe haven asset, climbed 3.3%. Analysts say there may not be an immediate disruption to supply despite Russia's attack. And we see spot gold jumped as much as 2% as Russian forces attacked Ukraine on the orders of President Vladimir Putin. Gold was trading at $1,968 per ounce, up 3.17%. The previous day, the highest since late 2020, as investors piled into safe haven assets and equity markets globally tumbled into the red. Oil and soft commodity prices are sharply higher. International benchmark crude surpassed $100 for the first time since 2014, as U.S. gold futures were up 3.08%. We see silver traded $1,969 per ounce. All right, and after the break, commodities market update is next. Do stay with us as Business Incorporated. All right, for commodities market update, we have Longi, the four analysts, a financial derivatives company, joining us. Great to have you, Longi. Well, First of all, let's look at oil prices there. We see Brent has hit $105.36 per barrel. I didn't expect $100 to come so soon, but with escalations, rising and tensions rising over in Ukraine, how do you see? What's your outlook for the price of oil going forward?
Definitely, none of us expected to see the $100 range so soon. Most analysts, us included, had predicted maybe later on in the year as things were going. Well, yes, in regards to Russia, yeah, the markets are definitely overreacting. This isn't the first time we've seen it, and it will more than likely not be the last time that we see it. Truth be told, the US has actually come out to say that they will not be imposing sanctions on Russia in terms of energy sanctions. So they'll be going through other routes. But despite this, we're still seeing markets overreacting on fears of potential supply disruptions. That being said, it isn't entirely out of the picture that sanctions might not be imposed on the energy sector, because if indeed the US wanted to hit Russia, that would be the place to hit them. Russia's total exports, about 63% of Russia's total exports in the oil and the fuel energy sector. So if they did intend to hit them, that would be the right place. Specifically, 26% comes from crude oil and about 12% or so comes from natural gas. So if there was a place where they wanted to sanction Russia and actually make it hurt the energy sector, definitely be doing it.
All right, let's look at other commodities now. See, in the past 3 months, the price of beans has fallen by about 25% from 56,000 for a 50-kilogram bag to 42,000. And I'm wondering, what's causing this price reduction?
Yeah, so it's actually quite interesting. Like you rightly said, about 3 months ago, price of beans, we've actually seen a very nice potential. We've actually seen a very nice decline, about 25%. So the reason behind this has actually been because of waning issues in terms of transportation costs. So up till now, we've seen transportation costs for beans actually drop despite the increase in fuel that we've actually seen recently. It still remains to be seen whether this might actually affect the prices going forward. But a lot of it has actually been due to increased supply actually from markets. Farmers have started to demand more GM beans. So GM, that's genetically modified seeds for beans. We've seen the demand for that shoot up for farmers. We've also seen supply increase into the market. So definitely a combination of increased supply and reduced cost of transportation.
Quite interesting. But in 2015, the EU banned, beans exports from, Nigeria due to high levels of weevils and insecticide chemicals. Recently, the federal government is pushing for an end to the ban on beans export. Do you see this, ban being lifted anytime soon?
Yeah, definitely. The prospects for the ban being lifted are actually looking good. Like I just mentioned, the genetically modified beans. Nigeria has actually become the first country to begin commercial production of these beans in the world. Quite interesting. What these beans actually do is they they're quite resilient towards pod borers, which are some of the most dangerous pests in terms of destroying beans crops. So we're more than likely going to see the ban lifted as these beans become more widespread across the cultivation of beans within the country. We're more than likely going to see the use of pesticides drop as these beans, the pests are no longer becoming much of an issue thanks to the beans. So the prospects for the ban being lifted are actually really good.
All right, but given that Nigeria is both the largest producer and consumer of cowpeas globally, what export potential does the commodity possess? Especially if the ban gets lifted.
Yeah. So, like we've already said, Nigeria is the largest exporter. But truth be told, despite being the largest consumer and largest producer of these things, of beans globally, we still have about a 500,000 metric ton shortfall domestically. So there's definitely still more room for production to increase. With increased production, we're more than likely going to see exports also increase as well. Also sort of links to the geographical indication zone. So beans, Nigerian beans, or loin specifically, do actually qualify for geographical indicators, which are legal labels that depict certain commodities as coming from specific places. So if the beans do get that geographical indication marker and production does actually ramp up, the prospects for increased exports are actually really good.
Okay, but in 2021, the U.S. and Nigeria launched, a special beans outreach program to improve, food security for Nigerians. The centerpiece of this program was the BT cowpea or biotech cowpea, genetically modified, a crop, gaining much. But what impact would these, biotechs and genetically modified cowpeas have on production and demand, in Nigeria?
Yeah, so the prospects of that are actually really good. Like you said, the genetically modified cowpea beans are a game changer. And it's actually quite positioning Nigeria as a leader in agricultural innovation globally. Like I've also said, becoming the first country in the world to begin commercial production of these beans. So in terms of how they will actually affect our production going forward, it's actually really good for the farmers. So these beans are not only resistant to pod borers, which have the potential to destroy about 100% of yields, they're also resistant to climate. Some of them are resistant to climate, some of them are resistant to other main factors that usually go a long way in destroying beans production and beans yields. So with the increased usage of these beans or proliferation of them across the country with farmers, we're going to see a decrease in the use of insecticide. We're going to see increased profits for farmers. It's going to become easier to cultivate and easier to manage. So it's going to have quite a large impact on production and demand.
We'll keep tracking that commodity. Longi Defoe, analyst, financial derivatives company. Always great to have you. Thank you so much.
Thank you for having me.
All right, so moving on now, South Africa's Minister of Finance, Enoch Godongwana, has presented a much-anticipated national budget policy for 2022, which contains, several nuggets of good news, which will undoubtedly bring the much-needed relief to cash-strapped South Africans. In the first budget speech, the minister says National Treasury has revised the country's economic growth for 2021 to 4.8% from 5.1% at the time of the medium-term budget policy statement, with real gross domestic products growth of 2.1% projected for 2022. The minister also addressed taxes with no increases in income, VAT, or road accident fund levies, but an increase on excise duties on alcohol and tobacco of between 4.5% and 6%. The minister further added that the National Treasury is allocating 76 billion rand for job creation programs. Let's take a listen.
The South African economy has not been insulated from these global developments. We have revised our economic growth estimate for 2021 to 4.8%, from 51% at the time of the tabling of the medium-term budget policy statement. The real GDP growth of 2.1% is projected for the 2022, which is an upward revision from what we said at the time of the medium-term budget policy statement. Over the next 3 years, GDP growth is expected to average about 1.8%. We need to stay vigilant and mitigate the risk where possible. In the upcoming period, we'll do more to work to strengthen fiscal anchors. We'll also reduce the continual demands on South Africa's limited public resources from state-owned companies. For this reason, state-owned companies need to develop and implement sustainable turnaround plans.
And the Executive Board of International Monetary Fund concluded the adequate consultation and first reviews of the extended credit facility arrangement and the extended arrangement under the extended fund facility for Cameroon. The completion of the first reviews enables the disbursement of 82.8 million SDRs, about $116 million, bringing the total disbursement under the arrangements to 207 million SDRs. And Egypt has named 6 international lenders, including Citigroup and HSBC Holdings, to manage its first sale of sovereign Islamic bonds. As one of the Middle East's most indebted nations, it looks to diversify funding sources and ease the burden on its economy. The Abu Dhabi Islamic Bank, Credit Agricole, Emirates, NDB Bank, and First Abu Dhabi Bank were also selected to help the government sell a sukuk of about $2 billion. The issuance could take place in the second quarter of this year. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye for now.